Hello everyone, welcome to today's Fundamentals. Hello Peter.
Hello.
A new day, a new week. What's new in the market?
Well, there seems to be a change of sentiment about the US dollar. We had a steep drop of the US dollar since Thursday, where practically the US CPI rates came out for October and showed that inflationary pressures were lower than expected. But late Friday in the American session, we had some comments by Fed Governor Waller, where he practically pushed back against the dovish bets which were placed by the markets that the Fed may ease its rate hiking path. More or less, Fed Governor Waller stated that the Fed's intentions remain hawkish and the main aim remains inflation. The markets should be aiming practically for the end target interest rate of the bank, which is still far away from the current interest rates, given that we have still high inflationary pressures despite the deceleration noted. So that tended to cause some second thoughts in the market about the Fed's intentions and whether the market's reaction over Thursday and Friday was practically an overreaction. And there seems to be a hold, a stabilization in USD-FX pairs, which may overspill also in US stock markets, gold, and other trading instruments as well.
And what about US stock market?
Well, US stock markets were on the rise. It's a big question whether the uncertainty which was evident, the turmoil which was evident in riskier classes of assets in the past few days is going to be overspilling in US stock markets as well, whether Waller's comments are going to be having a substantial effect, or are they going to be holding the move upwards or not. And I would be noting that despite the big chunk of high-profile companies already having released the earnings reports, it seems that US retailers come under the spotlight. On Tuesday, we get the earnings report of Walmart, and I would also be noting Home Depot. And on Thursday, we're getting Alibaba. And on Friday, we're getting JD.com. So there's still some releases which could affect the markets and create some substantial turmoil as well.
Moving now to precious metals, what's happening with the gold's price?
Gold's price corrected a little bit lower today during the Asian session. That would be a result practically of a slight strengthening of the US dollar. But overall, the bullish tendencies seem to remain present. And that could create a renewed buying interest from gold traders, which could push gold prices higher.
And what about oil?
I think that the energy market is maintaining a sideways movement about WTI prices. We can see that there are slight ups and downs, but overall WTI's price tends to remain in a range, a spectrum of prices. So I think the market is still looking for direction. They want more conclusive answers, whether we have a recession coming. And if that's the case, that would imply practically that the demand for the commodity would be dropping, thus would drop also oil's prices or not. Also, the Fed's intentions are going to need some clearing as well. So I would expect the oil market to remain in a wait-and-see position for now.
And what's on the calendar for today?
Well, we already had from the Eurozone the industrial production growth rates. I would be noting also on the monetary front that we have BOC Governor McClem speaking, and McClem could create some volatility for cat pairs. During tomorrow's Asian session, I would be definitely highlighting the release of Japan's GDP rates for Q3. It's the preliminary release. A deceleration is expected. The big question is, how far will the actual rate slow down? And that could create, depending on the actual rates as such, could create some bearish tendencies for JPY. Other than that, I would be also noting during tomorrow's Asian session the release from RBA of the November meeting minutes. And should some hesitation on behalf of the bank be verified by the document, that could imply more or less that the easing of the bank's rate hiking path is confirmed. Maybe even it's about to reach a halt, maybe not in December, but definitely early next year. And that could weaken the Aussie. Last but not least, I would also be noting from China the release of the industrial output growth rate for October, as well as the retail sales growth rate for October. It seems that the Chinese have turned their attention towards economic growth once again, finally, and the results would be a starting point, especially the industrial output, which is going to show us exactly how healthy the industrial sector, which is huge in China. While on the flip side, the retail sales are going to show us the internal demand side of the economy in China, which is also substantial, because the Chinese are not relying only on exports, but also on the internal demand as well.
And what about the rest of the week?
In the coming week, I would be turning my attention to the pound. We get the employment data for September, and there's some for October as well, and they're due out on Tuesday. So that would be the first test for the pound. The second test for the pound would also be the CPI rates, which are also of interest. Should there be further acceleration, we may see the pressure on Bank of England increasing to intensify its rate hiking path. On Thursday, we're getting UK Finance Minister Jeremy Hunt. He will be speaking, he will be making the autumn statement. Probably he will be announcing tax hikes and spending cuts, and all that in a frame of a fiscal policy tightening, I would say, which could weigh on the UK economic outlook and weaken the pound. And last but not least, from the UK, I would be noting the retail sales. They would be on Friday. So practically we have a string of releases which are of interest for pound traders and could keep volatility up for the pound for the rest of the week. That's one. The second would be US data, and I would be noting the weekly initial jobless claims, but before that on Wednesday I would be getting the retail sales growth rate is for October and could also create some volatility for USD pairs. Last but not least, I would be noting from Australia the employment data, and we're getting that in practically two sets. The first would be on Wednesday's Asian session when we get the wage price index, which is going to show us how have wages been behaving on a quarter-on-quarter basis. That releases for quarter 3. And the second set would be on Thursday's Asian session when we get the unemployment rate and the employment change figure. Now, should the unemployment rate show that the Australian employment market remains tight, that would be a plus for the Aussie and could provide some support.
Great. Thank you, Peter, for your time, and everyone for watching. Join us after a short break for technical analysis with Peter Yosif.
So, welcome to the technical analysis part of the presentation for today. In front of your screens, you have the US dollar index. It's the 4-hour chart. Mind you that all the charts which are to be presented today are to be of the same time frame, unless otherwise stated. We haven't visited our chart since Thursday mid-European session. So practically the tumbling of the US dollar over the past 2 days, which was the main characteristic of the market's movement, we didn't have a proper chance to examine it. We're looking at it right now. Note the wide drop from the American session on Thursday up until the late American session on Friday. Now, definitely we have some discussions to make, and we make a start with correcting the support and resistance lines. I would like to drill to the 1-hour chart for just a minute. Somewhere here. Okay, back to the 4-hour chart. Let's go hunting for new resistance support lines. The first support line would be placed at 106.10, which is also the lowest part of a chart. Let's unleash it. And there's another one here. We're definitely going to be widening the distance between supports and resistance lines given the recent volatility. This would be an interesting true. I'm keeping that as well. And we've set the support lines. Okay, let's see also the resistance lines. This is true here, which is of interest, as it was repeated and also worked as a resistance line in the past, so I'm keeping that one. And that would be the 107.45. Another true here, but that's a little bit too wide. Now I'm setting two levels. The first would be this one, where we had substantial support and resistance over a number of times. And the second would be here, this peak here. Could be a little bit higher. Okay, let's readjust the chart. $110.90. $109.10. Yep. And the second support line being placed at 104.50. First support line being placed at 106.10. First resistance line being placed at 107.45. $109.10, $110.90. So we're locking this in. There was a clear downward movement, which has been broken. So for the USD index, we note that there was a tumbling which dropped as low as the 106.10 support line. Now the future direction, given that the price action has corrected a bit higher, and the main element was that it has broken the downward trend line guiding it since last Thursday, we switch our bearish outlook and turn it in favor of a possible sideways movement, in which case we would expect US dollar index to remain between the 106.10 and the 107.45 resistance line, something like this area here. It's characteristic that the RSI indicator seems to be recovering from the lows below the reading of 30, has broken above it, and has started to aim for the reading of 50, but it's still a far cry away from that. So for the time being, we tend to maintain a bias for sideways movement. Should the bears, for any given reason, regain control over the US dollar index, we may see the price action dropping, breaking the 106.10, which provided support here. And definitely for the bears, we would require a lower trough than that one. And in that case, we may see the price action dropping, breaking the 106.10 as one, and start aiming, if not even reaching, the 104.50. On the flip side, should the bulls take over, we may see the price action of the US dollar index rising, breaking the 107.45, and start aiming for the 109.10. Let's have a look at Euro USD. Still in the 4-hour chart. A sky high Euro USD. First resistance line. Let me drill out to the 1-hour chart just for more accuracy here. Okay. Back to the 4-hour chart. Drilling now to the daily chart just to have a look at the big picture. Okay, that's nice. There was a long downward trend line which has been broken. And it was beginning of February. Yep, since the 10th of February. Look at all this way down, with the lowest point being practically on 0.95. It has been correction and has corrected higher and has been rising. The question is whether that, drilling back to the 4-hour chart, whether that upward movement has been broken or not. And in my opinion, it did. And we can see that here. So that's one issue. And the first support line, resistance line, is being placed at 1.036, 1 pip lower than the actual peak, but that's okay. Let's go hunting for new resistance lines. Note how this level provided resistance back here as well, and that was around the mid of August. Let's have a look at it. Yep, the 11th of August to be exact. This peak is going to be the second resistance line. Note how this level has provided resistance on the one hand, yet provided also support on the other. And last level should be here. You have multiple touches and aim for. So that should be good enough. And that would be the 1.49, 48.50 to be more exact. Yeah. 1.0605, the last one. Let's go hunting for support lines. I would be noting this peak here, then this one, double peak, and this true. Let's have a look about the validity though. Nope. Abandoning the support of the parallel level. Let's drill out to the 1 hour chart. Okay, this is valid. This is valid. This is also valid. And this one as well. This one's not used. There's no use for this one for the time being. Let's delete it. Okay, seems to be clear. And back to the forward chart. Let's go have a look whether that the levels we have set are finding verification, and they do. Okay, there was some resistance, some touches here. Okay, this could go a little bit lower. I'm keeping it. Note the touches, touches, touches. That's good. Now, let's place also the labels. And we make a start with the R3 at 1.0605. Let's lock this in. One point 0220 the first support line. Second support line at 1.0095. Final support line at 0.9935. Okay. So for the time being, Let's make a start with the rise of Euro USD, which was mostly a result of the weakening of the US dollar rather than a strengthening of the euro. You can see that the pair has hit the ceiling at 1.0360, corrected a little bit lower. It seems to be stabilizing. Given that the price action was able to break the upward trend line guiding it, we tend to maintain a bias for a sideways movement between the 1.036 and the 1.0220. We're talking about a span, a distance between the R1 and the S1 of 140 pips, which seems to be wide, but in reality, note how the pair was able to cover this ground within 16 hours. So we're talking about a space which could be covered easily by the pair within 1 day. Now, for a bullish scenario, we would require clear breaking of the R1, 1.0360, and the price action to start aiming for the 1.0485. As we have mentioned, for the time being, we tend to maintain a bias for range-bound movement between the 1.0360 and the 1.0220. It could be much narrower, though. I wouldn't be surprised to see that, as the market is trying to decide the direction of the pair's next leg, and it will be mostly US dollar dependent. So we expect that the US dollar will maintain the initiative and lead the way for the direction of major currency pairs. And in case we see the bears take over, I would expect the price action to drop, breaking the 1.0220 and start aiming for the 1.0095. Let's have a look at cable. Cable, which did not have. It's a beautiful sight to see that the R3 held its ground at 1.1855 and remains as a resistance line. But the rest has to be corrected, definitely. And we make a start with the 1.1640, the 1.1455, I would be noting this here, this here. It could go a little bit lower and provide some support. Yeah, somewhere here. But the next level will be here. The one will be the R2, which will be placed at 1.2020. In red, please. And the final resistance line, a little bit higher. And maybe a little bit out of sync, but still pretty valid. 1.2275, ladies and gentlemen. Okay, let's readjust the chart. We have to note here that GBP/USD was not as strong as we had expected against the US dollar, but that's partly understandable because the pound as such shows some signs of weakness, and that's also understandable. That's Fundamentally, the outlook for the UK economy is pretty grim. We have mentioned also in the fundamentals how we expect that practically the price action of GBP USD may also be affected by the GBP side, as we have a number of releases during the week. And especially I would be highlighting Jeremy Hunt's autumn statement, which is widely expected, as well as the CPI rates of the UK for October, which are going to define practically BOE's interest rate decision next month. And should the inflation rates accelerate once again beyond 10%, maybe even 11%, mind you that 11%, if I'm correct, is the bank's expectations for the headline CPI rate on a year-on-year level to peak and then start slowing down. So should there be an acceleration beyond 11%, that would be a big issue for the pound. Now, regarding the pound, let me drill out to the 1 hour chart. I would like to note practically this upward trend line starting not from down here, but from here. And we can see that it had been touching and has been broken. Could be even a little bit lower. The stabilization of the pair over the past, I would say 16 hours, was very characteristic. And the fact that it was not able to break above the 1.1855, has to go a little bit higher, was another indication that the bears are losing ground. And in this case, I mean cable, back to the 4 hour chart, we note that, let me delete this, we note that the RSI indicator corrected lower from the reading of 70, which was at overbought levels. It's currently at 62.7 and seems to be dropping further. Enhances the view of a possible sideways movement, in this case between the 1.1855 resistance line and the 1.1640 support line. So for the time being, we tend to maintain a bias for sideways movement, and in which case we may see the price action remaining between the two levels we mentioned. Now, should the bulls regain control, I would expect the pair to definitely break the R1, as we're going to be requiring a higher peak than this one. In that case, I wouldn't be surprised to see it even breaking the 1.2020. Cable is quite volatile. We're talking about 145, 165 peeps here. So the chance of a wider rise, given that the price action of cable was able to cover such a distance within easily 1 day, I wouldn't be surprised to see it even breaking the 1.1855, remain unsatisfied, break also the 1.2020, and aim higher. But that's all in case we see a bullish scenario taking over. For the time being, our main scenario is that there will be a sideways movement and stabilization of the pair. In case we see the bears taking over, we may see the price action dropping, definitely breaking the 1.1640, and start aiming for the 1.1455. Okay, let's have a look at safe haven currency pair USD JPY. Oh my god, that was a wide drop. Okay, downward motion which has been interrupted. But before we move on, let's have a look at support and resistance lines. Definitely we're going to need some readjustments here. I'm going to be widening and this one has to go lower as well. Let's open it. There seems to be some support here. I would be noting this support here as well. Yeah, tested before as well. Also is a resistance line. Pretty valid. Let me readjust the chart. Okay. We're keeping these and we make the first resistance line being the 145.20 in red. BR2 being placed now at 142.40 in red. First resistance line being placed at 149.8, 140.80. Sorry, my mistake. 140.70 in red. First support line being placed in green, and that would be the 138.45. Second support line would be at 136.15. And final support line being placed at 134.35. Adjusting the levels. Okay. Everything locked in. So we note that there was a wide downward movement of USD/JPY as the US dollar weakened. There was a correction high at some point, but it continued lower and hit the ceiling during the American session on Friday at 138.45. the S1. So that marks our first support line. It's the level at which the downward pressure was not able to surpass, and at that point practically buying orders overwhelmed the selling orders, something which was fundamentally explained mostly by Governor Waller's comments. But on the technical side, the main element here is that the downward trend line guiding the pair since the American session on Thursday has been broken. Hence, we switch our bearish outlook in favor of a bias for sideways movement initially. Mind you that the RSI indicator has corrected higher than the reading of 30 and is slowly but steadily ascending to the reading of 50, implying rather decisive market, or if you prefer, that the bear's effect is fading away. Now, should the pair remain stable, we may expect it to remain between the 140.70 resistance line and, on the other hand, the 138.45 support line. In case we have a bullish scenario, we expect the price action to break above the R1, 140.70, and we highlight the 142.40, a level which provided resistance here. It was very, very interesting. And it's pretty close, but USD JPY can do it easily within 1 day. Easily. The question is whether the bulls will take over or not. On the flip side, should the bears take over, we may see the price action once again diving lower, breaking the 138.45, and it drop lower, but still above the S1 would be considered by us as a sideways motion. And should the S1 be broken, we expect the S2 to be the next target for the bears. That would be the 136.15. Okay, let's have a look at the other currency, safe haven currency pair. That would be USD-CHF. And a similar dive lower and a similar resurrection. Actually far steeper than USD-JPY. There was less hesitation. And it has been broken as well. Drilling out to the 1 hour chart so we get a clearer picture. Yep. Back to the 4 hour chart. Let's see what we've got here. Definitely we have a support here. Support here. At 0.93, 97, 95, 98, 95. Yep. Second support line. Let's go hunting. Beautiful touch here as well. Second support line, I would place it here. And that would be the 0.9285. Final support line. At 0.9190. And let's go hunting for. Actually, there is a resistance line where the price action is right now. And that's interesting. See the touches here. Here. Okay, I'm keeping that. It's pretty close to breaking it. That would be the 0.9495. Second resistance line, I would place it here. 0.9625. Next level, I will be noting this true here. And that would be the 0.9735. Let's lock everything in, readjust the labels, correct them. Now we get a clearer picture. Let's start with the S3. 0.9190. 0.9285. 0.9395. 0.9495. 0.9625. And final resistance line being placed now at 0.9735. I know that the distance between the resistance support lines has been shrunk. Expect some easing of volatility for now. On the other hand, the RSI indicator is still below the reading of 30, may imply that there may be a correction higher, as the pair may still be at oversold levels. For the time being, though, we maintain a bias for a sideways movement between the 0.9495 and the 0.9395. We're talking about 100 pips distance here. Should the bulls take over, we may see the price action of USD CHF rising, breaking above the 0.9495 and start aiming for 0.9625. On the other hand, should we see the bears being charged, we may see the price action dropping, breaking the 0.9395 and start aiming for 0.9285. So overall, I would expect though that the price action of USDHF is going to be maintained within the current levels. Maybe though there may be, just maybe, be some bullish tendencies. Why? Because we have a market sentiment which is pretty low and seems to be showing that the pair is still at oversold levels. And that could cause the price action to rise, break slightly above the 0.9495, which would be pushing the R1 a little bit higher. That should be it. So from all of us here at IronFX, best wishes for solid trading.
and welcome to another informative video. In today's video, we'll be looking at earnings per share. Earnings per share, or EPS, is a financial measure that calculates the profitability of a company. It does this by dividing a company's profit by the number of its outstanding shares. EPS is very important to traders because it indicates how much a company earns for each of its shares. Investors also typically pay more for shares if they think the company has higher profits relatively to the price of those shares. While as a CFDs trader, you won't actually trade the real share, but contract for difference on shares, it is important to be aware of company earnings and how well a company is doing, so you can trade CFDs on shares confidently. A company is generally considered to be more profitable the higher its EPS. Two different formulas are usually used to calculate EPS. The first formula is to take the company's income after tax and divide it by its total number of outstanding shares. The second formula is called the weighted earnings per share. Here, an investor would take the company's net income after tax, subtract total dividends, and divide this number by the total sum of outstanding shares. Also, investors will use EPS to measure a company's PE ratio, further helping them to identify the value of a company and its shares. Although a useful metric for traders, EPS is only meaningful if compared against other competitor companies operating in the same sector. If you're trading CFDs on shares, as always, be mindful of the risk that comes with trading. Do your research and be cautious to minimize your losses. Thank you for watching.
So in today's webinar with IronFX, we're going to talk about correlation between different asset class as well as between different currency pairs, how the positive or negative correlation between currency pairs can help you identify your support resistance, can help you identify your trade positions, how to enter a position or when to exit, right? Hi, Adeshina from Nigeria. Hi, good to see you. Thank you guys for tuning in early today. Hi, April. Okay, so like I've mentioned, we're going to talk about correlation between different currency pairs as well as across assets to improve your trading strategy, right? So let me know in the chat group or the chat box because I can see it. I have it open on another screen so I can see all the questions or any requests that you have for me, right? Just ask away if you have any questions. So just maybe a few more minutes before I start. Can you guys see me? My typings. In case I need to copy and paste some of the important links. Wait, let me see. Because previously when this happened, yeah, everyone, some of the attendees mentioned that they can't see or can't type. So, okay, this is great. So like I've mentioned, I have an ulcer, so bear with me if I speak slowly because it's right on the right side of my tongue. So if you can't fully catch me, also let me know. I'll try my best to speak as normally as possible and as slowly as possible. Okay, so before I start the session, let me check whether I'm sharing the correct screen. You can see my screen right here. Okay, let me just share with you guys a couple of important bring you guys to a couple of important pages. So this is IronFX page. If you guys have missed the first part of the session, or you guys wanna take a look at our previous webinars, right? Just come to this page here. Let me cut and paste to the chat group. Okay, you can see, right? You can see all our different you can see and register for the upcoming sessions that we are gonna have. But wait, give me a second. This is not the page actually. Should be best for me. Me 1 second. Aha, here, past webinar, sorry. So this is the link. Past webinar should be here. For the previous link that I sent is for registration of upcoming webinars, and this will be for previous webinar as well as today's session that will be recorded and posted probably by end of the week. So if you guys have missed out on any parts and you want to have a refresher course or you want to rewatch the session, you can click on the link, come to this page here, click on English, and this will be the past sessions that we actually have. There are a lot of live trading sessions, support and resistance, some of the educational ones as well. So feel free to come and check it out. Okay. And then I will bring you guys to the second important page, which is our, okay, maybe I should do it here so you can see. So you can click on our VIP room here. Right. So this is a special partnership with Everest Fortune Group with IronFX, where we have this VIP trading room. So if you guys already have an account with IronFX, you can access the VIP portal depending on how much deposit you have with them. So for example, for this portal itself, you can get exclusive market forecasts where you trade and learn with our institutional and interactive grade market forecast. So most of the time, the analysts, the prop traders, as well as Desmond himself will come to the portal to create market forecasts where you can see. If you have any questions, we have an interactive chat for you to ask away. So later I'll show you guys how it works. You can actually ask any of our traders about how they think of your entry or where you should place your stop loss or take profit, etc. Right? So it's a one-on-one personal interactive chat. And you can also request for market forecast as well. So you could say things like, hey, Desmond, what do you think about USD JPY in the upcoming 2 days or upcoming 4 hours, right? So how you can access to our premium service is that we have 5 tailored account types, depending on the deposit or as well, depending on the deposit or depending on what you need from the website, is from the portal itself. So if you get the platinum, you can get priority support as well as a weekly private 30-minute group call where you can discuss and analyze any of the trades. So just click on the VIP room. I'll paste the link right here. Okay, so this is our VIP portal. I'll just do a quick run through. Okay. So this is how the page look like, depending on which tier you are in. So this is how the portal actually looks like. You have a chit chat section where you can come here and then you can chat with any of our traders or any of our analysts about what you think of a potential setup, or what they think of a specific currency pairs. And then there's the potential setup. So once in a while, we'll come to this page and then we'll be talking about what trades we'll be looking at or what trades we are taking. Okay. Then there's the news section. Every day there will be a news update that will be posted here. The important news, the market news, the announcements. And then there's the major pairs. Analysts and prop traders will come here and then they'll talk about, you know, hey, so today I posted something about the DXY. You know, when you hover about the red highlighted words, you can see exactly what I'm talking about. So it won't be so confusing for our clients, right? So the same to you, if you have any questions about any currency pairs, just click on the pairs. So we have majors, commodities, indices, crypto, all the crosses, as well as whatever you want, all the currency pairs. If you don't see here, let us know. You can request for it. So you can come here and say, hi, Annabelle, I want to know if price might break this support, for example. So you can highlight the support level. You can actually draw it here, and I will know. Okay, enter. So I will know exactly what you're talking about. Okay. Hi, Rahim. Okay. Anyway, okay, so this is how the portal looks like. You can check it out. I have pasted the link on the chat, in the chat. Okay, so let us start the session today. So today's webinar series, we are going to talk about using correlation to improve your trading. So out of the attendees, does any one of you use correlation at all when you trade? For example, maybe if you are looking at USD pairs, you might look at DXY or the dollar index. Let me know in the comment section if you guys use any correlation currency pairs or across asset class to improve or to redefine your trade positions. I have a couple of answers. Some yes. Haven't done so or thought of it. Okay. This might be a good introduction for those who have not used it before. It will be a relatively simple and understandable webinar series because for some who haven't learned or who haven't thought of it, this would be a good place to start. And then, okay, so let's dive in. So before I start, disclaimer, the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. So before you start trading, please do your own due diligence. So this is me, I'll be today's host. I'm Annabelle. So I'm an analyst for Everest Fortune Group, which is the award-winning research firm. Finalist for Best FX Research 1920 and 21. Finalist for Best Equity Research 2020 and 2021. So the agenda for today, let me grab my pen. So agenda for today, we are talking about correlation between different currency pairs and maybe different asset class as well. So we're going to have a brief understanding of what is correlation, understanding positive and negative correlation, strong versus weak, correlation across multiple time frames, because there are you have a daily chart, you have a H4, H1, and then you have your 30 minutes, 15 minutes, 1 minute, 30 seconds, okay, etc. So correlation across multiple time frames might differ because of the different time frames. Okay. Using correlation to identify support and resistance as well as breakout. Then I will move on to live charts. Sorry, my horrendous handwriting. Okay, but anyway, so what is correlation in layman term? Can anyone of you let me know? What do you guys understand about correlation? Is there only positive correlation, negative? Is there a neutral? What's the understanding of correlation in your knowledge? Okay, it's relationship between the currency pairs, yes. I do not understand. Okay, no worries. So what exactly is correlation? Correlation measures the relationship between two currency pairs. Okay, for example, to put it simply, correlation is like a relationship. So for example, when there's COVID, what do you think is the correlation between COVID and let me find a good one, and pharmaceuticals and pharma stocks? Is it a good correlation, meaning COVID cases rise, pharma stock also rise, right? Because pharma stocks, pharmacies, pharma companies, they have to produce more test kits. They have to produce more medication. They have to produce more manpower as well, right? So in general, pharma stocks shoot up because the government has to pump in more money as well. So the relationship, the correlation between COVID and pharma stock is positive because both of them go up together in sync. Okay, that is a positive correlation. And a negative correlation means COVID versus maybe the amount of ice cream you eat, right? So it doesn't matter whether I have COVID or not. It doesn't make a difference to the ice cream I eat. So it's a negative correlation. Means COVID cases go up, it doesn't mean that my ice cream might go up. Okay, maybe this is a neutral. Okay, I would say that this is a neutral. In this case, neutral. Maybe COVID and let me think. Negative correlation. Okay. For example, tourism. This is definitely a negative correlation because during COVID, during the pandemic, nobody is allowed to travel, right? So when your COVID cases go up, definitely your tourism will come down. So this is a negative correlation. So we have positive, we have the non-bias, which is on the neutral ground. We have a negative correlation. Okay, hi Wanderhi. Bear with me because I have an ulcer, so I might speak a little slower. Okay, so there's three types of correlation, which is the positive, the negative, as well as the neutral. Right? It's quite easily understandable. So between currency pairs, let me erase all my. Okay, so in FX itself, some currency actually move in tandem, meaning together. So one will go up, the other one will follow very closely, or maybe one go up this way, one will follow quite closely. So there are two types. One is very strong, and then one is just maybe not as strong, but still positive. Okay, so same goes to the negative. There's a very strong negative correlation, which is they move in tandem. And there is some that is, very strong means directly opposite. Okay, ignore this. This is wrong. So very strong means very opposite. And then some that are maybe not so strong, okay? But still negative correlation. So there are different types. I hope my COVID example was very clear. Later on, I'll give you some example and I'll show it in the live charts how some currency pairs are correlated or not correlated. So different types of correlation. So can you guys name me some of the pairs? Let me get my pen. Okay, maybe we start positive. So can you guys name me some of the different types of or if you guys know of any positive or negative correlated currency pairs? Okay, most of you said that. Nope. Oh, okay. XAU USD, yes, correct. Yeah, they are negatively correlated, correct. Okay, so the different types of correlation are, some are within FX pairs. For example, your GBP, USD, GBP, JBY. Maybe I can show you. Okay, so for example, I already pulled the charts up. So this is my GBP versus my GBP, JBY. So they are positively correlated because as you can see from the charts, they move in tandem, meaning to say when my prices come down, it will come down. When my prices shoot up, it will go up. So this is somewhat positive because you can see there are some instances. Okay, this one is one instance that I highlight where my GJ actually spiked down, but my GU actually moved up. So when there is a correlation, it doesn't mean that it always have to move exactly the same. And the reason why there is a difference in, okay, you see, this is 2nd of August, right? The reason why, so the reason why there is a difference in, let me close this. There's a difference or a spike up or spike down or suddenly negatively correlated is usually by external forces and important announcements, etc., like your Fed rate hikes, your government cutting rates, etc. So it has to be a very major news for them to be so negatively correlated in a positively correlated relationship. Okay, so for this case, on the 2nd of August, you can see that JPY actually dropped because of the Fed official hinting that more rate hikes are coming. Okay, so there must be a major news that causes this. I actually Googled it, but I can't find it here. But yeah, it's because of big news like this. Yeah, dollar jump versus yen as Fed officials hint more rate. So yen actually dropped right here. Okay, so same goes to this. If you actually see a sudden movement up, but there is no movement in the other correlated pair, it must have meant something. Okay, there might be a major news, there might be big announcements, or something along the line. Okay, let me go back to my slides. Okay, so it can be within your FX pairs, the correlation, it be negative or positive. It can be across FX pairs, meaning it can be your AUD USD versus your AUD CAD. So across FX pairs or within FX pairs. And then it can also be across asset class, meaning it can be maybe an FX versus a commodity, for example. Maybe your XAU versus your DXY or USD or JPY, something like this. Okay, because actually gold is quite a common currency, common commodity that is often compared with other FX pairs. Okay, it can be within indices as well, meaning to say you can compare S&P versus your Asia or your Hang Seng index or your SPX. Okay, so it can be within indices as well, or it can be within sectors like your bank index versus banks. Okay, so there are many different types of correlation that we can look at. Even your even in crypto, for example, you can compare. In the past, Dogecoin, right, used to be very popular, and it's always correlated to this guy called Elon Musk and his tweets, right? So there's often correlation between a lot of things. It's just how we identify them and how we use them to our advantage. Okay. Okay, so for example, here we have our GBP, JPY. Okay, actually it's here. Okay, here might be easier. GU versus my GJ. So you can see that they are they positive or negatively correlated? Let me know in the comment section. Okay, I see a lot of positive, correct? Okay, so these two currency pairs are positively correlated because they move in tandem, meaning to say when my prices come down, when my blue prices come down, my orange prices come down. When it moves up, they move together. Okay, so it's not identical, but they move in the same structure or in the same direction, unless there are major news that might change. Because the base currency is the same, right? There must be some form of similarity between them. So ultimately, you are just comparing USD and JPY. Okay, so unless there are major news in your USD or JPY, then most of the time it should move in tandem. Okay, so positively correlated because prices move in the same direction. Then we have our AUD USD versus our USD CAD. So from here, you can see that one price goes down, the other price goes up. So this is a negatively correlated currency pair. Okay, also because one is your front, one is your front pair, one is your back. Okay, so you can see one price actually comes down, the other goes up. So they move in the opposite direction. When this price comes down, this price goes up. Okay, it's very easily understandable. Okay, so this chart, you can see that AUD USD versus your USD CAD, they are negatively correlated. Then we have our SPX versus our Euro USD, which is often compared, right? So not only do we compare our FX pairs only, you can compare indices FX, you can compare commodities FX. So like I've mentioned, XAU, which is gold. So gold is a very common commodity that is compared to other FX pairs, right? So in this instance, you can see that my prices are going up. Okay, it's not so super correlated, but you can see that they react the same way to the market, right? So this is probably maybe a 0.6 to 0.7 correlation. It's not very correlated. So I forgot to mention as well, for correlation, there is -1, meaning not correlated at all, 0, 2, +1, meaning very correlated. So +1 is the maximum, -1 means not correlated at all. So in this case, you could give it maybe a 0.7, okay, because it's not very correlated. There's still very, the spaces are still quite huge. But if I'm going to compare this I would say is a 0.9 to 1 because our prices are very closely knitted, right? As you can see here. Okay, let's take a look at our gold, okay, versus our SPX. You also can compare indices versus your commodities. So orange being XAU, prices are moving in the opposite direction. As you can see, my prices are coming down, but prices of my SPX is going upward. So it reflects negative correlation. So this is probably a -1, right? Because you can see it exactly moves in the opposite direction. Okay, so how do we actually use correlation to identify support and resistance? Does anyone know or have tried it before? Happy lips. Okay, I guess most of you haven't tried using correlation to identify support and resistance. Okay. So this is our AUD USD versus our GBP USD, right? So you can see if I put them together, they might be quite correlated, but not so, as you can see that. Wait, let me draw clearer. You can see this here. Right, the prices is like this, but my prices here goes up all the way, and then it comes here, tests a few times, comes up again. So it's not exactly very much similar if I were to put it overlapping each other, right? So I would say this is a 0.7 correlation, not exactly very strong, but it's still correlated. So you can still find you can still fine tune your position by finding the support and resistance of these two pairs. Meaning to say, if they're actually still correlated, you can still find the same support as well as the same resistance in the chart. Okay, so for example, in my AUD USD 1-day chart, I clearly can see that this is my support, right? So this is clearly my support line here. So at this point in time, probably it should be the same date. I can also find my support here. So these two, the dates here versus here should be somewhat similar, or sometimes it might vary by maybe a few candles. But in general, if they are positively correlated, you can find the same support and resistance. So for example, when we are sending our analysis or our research papers to institutions or other corporates, we will let them know that, hey, you know, AUD USD is at a current support of which number, and then it should be similar to GBP USD at the support of what number, or 1.3688, and as well as the resistance. So we'll let them know, hey, you know, AUD USD is at the support of blah 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 XXX. Same goes to your support area of GBP USD at XXX, and then it should be the same as maybe your NZD USD. So what we are trying to say is that for positively correlated currency pairs, usually when they're at the support, the other currency pairs should also be at their support level. Okay, this will later on help you to identify your breakout levels. Okay, I will show you guys later on. So when it comes to this correlated pairs, we'll show you exactly where the support is. So when the support is here, it should be at this level. When it's a resistance here, it also should be at its resistance level here, right? So when prices come to test once, twice, this time, the third time, you must be thinking, hey, should I be playing a reversal or should I be playing a breakout? You can actually come to a correlated chart or correlated currency pair to check it out. So 1, 2, 3. And then same thing, you see. So both of them are at a level where they are undecided whether should the prices be going up or should the prices be in a reversal. So you know that the market hasn't decided yet. But if let's say on my AUD USD, my price actually came up to here, right? On this candle here, and maybe one more, okay? So if my prices are on an upward momentum, but my GBP USD is still here, you know for sure that, hey, my prices might actually fly up the same as AUD USD. So this could be used as an indicator, as one of the indicator, not as the only indicator. So for example, if you have all your levels, all your trend lines, all your channels all in place, all you need is one more push or one more factor to actually help you make that trade more more profitable, right? Or make that trade more accurate. So in this sense, if you have all your flip levels, all your channels, maybe your Ichimoku, all your indicators are all in sync, right? So you just need that one more comparison between a correlated chart to tell you that, hey, actually I'm in a bullish momentum right now. Maybe I should buy at this price here. So this is how we use correlation to redefine or refine our trades, our trade positions. Okay. So using correlation to identify breakouts. So like I've mentioned in this chart, it will be the same. For example, XAU versus US dollar, you can see that they are very negatively correlated. So for negative correlation, always remember it will be a crocodile mouth when it's open. So it's always in the opposite direction. But if it's positive, it's always parallel. Okay. It's always the same direction. So in this chart, you can see that let me just grab a sip of water. My ulcer is very painful. So for example, we can see here that my prices have touched once, twice, 3 times here. At this level here, I'll be thinking, hey, should I be playing a breakout or should I actually wait for a reversal, right? So if you compare to your US dollar, which is negatively correlated, at this point in time, I can see that, hey, my prices are coming down. My prices actually plunged. So if it's negatively correlated, then I'll be thinking, okay, I have a confirmation that bullish momentum is for my goal, right? Let me repeat myself. So at this point in time, ignore this area. So let's say we are right here on this red line and prices of my goal actually spiked up, right? Okay, there's a breakout. But could it be a fake breakout, right? Because I wouldn't be able to see all this yet. Then I will wait for my confirmation on my USD. I will seek for reference. So for example, at this level here, it will be the same. All right. It will be the same here for A, for this to be broken, for this level to be broken. So we are both at the same point waiting for prices to be broken. So once I have a upward confirmation of bullish momentum, I'll probably wait for my second candle for confirmation. This should be an downward trend. This should be an upward trend before I take any trade, because you wouldn't want to enter a trade on a false breakout, correct, on the first candle as well. So I'll wait. Okay, so there is a confirmation that my USD is dropping. So I would enter my gold maybe at this level here. At this level here. Or I could enter my, okay, this USD. So other USD pairs maybe at this level here for a downward bearish momentum. So this is what we meant by that's what we meant by using correlation to identify our breakouts. Okay. So when there's a breakout of the currency or that pair, you seek for confirmation or reference from another correlated or negatively correlated currency pairs to give you the extra confirmation before you enter a trade, right? Okay. Okay, now let us move to my live charts. I will show you what is negative or positive correlated. Okay, let's start with, okay, so this is my AUD USD versus my, I don't want this, sorry. NZD, let me add. Okay, for this, as you can see, this is my AUD USD versus my NZD USD. So you can see that, let me try candles, see whether it's nicer. I think lines are clearer. Okay, so these two charts, as you can see here, they are very, very positively correlated because the prices are moving exactly the same steps, as you can see, right? So this is one of the currency pairs that move exactly the same. So it's very, very strongly correlated. And I will give you a tip today. I'll give you guys a tip. I'll leave you guys with a tip today. If you guys want to know whether a currency pair versus commodity indices or another currency pair is correlated, just go to my FX book, correlation, select this, and this will be the page where you can find all your different currency pairs. This is like a cheat sheet that we found. So obviously there are so many currency pairs, right? You can't possibly remember who is correlated to what, unless it's major pairs like your DXY, your gold, your Aussie dollar, your Aussie, your Kiwi. These are the major pairs that you can remember off the finger of your tip, of the tip of your fingers or of your head. But if you're looking at all the currency pairs or maybe exotic pairs, or if it's a new currency pairs that you're recently exploring, you do not know whether they are correlated, you can come to this page here, select the time frame that you usually trade with, because for different time frames, it works differently. It might work in a one day, but it might not work if you zoom into a 30 minutes. Okay, so it's depending on which currency pairs and what time frame you actually are trading in. So usually we go higher time frame for hours. Find currencies with correlation higher than, for example, you want very correlated, so they will highlight for you. See, 96. Okay, let's take a look. 100%. This is interesting. Oh, okay, because it's the same pair. Okay, so you can come here, you can take a look. It's a very interesting site. If I'm not wrong, if you click in, they'll tell you which are top positive correlation and then top negative correlation. So you just have to focus here. Okay. So this is a cheat sheet that I will leave you guys with to explore, right? Come to my FX book and check it out. So for this pair, I'll just give you a couple of examples before we end the session today about correlation. So for my AUD versus my NZD, we can see that they are very, very correlated in the sense that they move in tandem and exactly the same. Okay, so what we can do here is, for example, should I remove one? Okay, maybe I remove. Give me 1 second. So for example, in this manner, okay, I'm looking for at this level here. We do not know whether there is a triple top or we are still looking at maybe price breaking the Ishimoku or breakout at this level to go on a bullish momentum, right? Since it has been on a decline for many weeks, but we do know that, you know, prices are on a downward trend, just that it broke out here. Okay, just let us place this here. Then let me add my NZD. Okay, so for this chart example, can see that price actually move very similarly. But what we can do is, for example, you look at this area here, price actually did spiked up a little bit, right? But you also realize that this is a fake breakout. If honestly you were to trade according, do not trade, what was I going to say? So at this point in time, we'll be thinking whether prices are gonna break out of this triple top, right, for both the currency pairs. So how you actually utilize positively correlated currency pairs is that we wait for confirmation from the other pair. For example, maybe prices will react faster at this area and it might come down first. Then we have a confirmation that, hey, you know, it's still a bearish momentum instead of this straight breakout, right? Because of it broke out of my descending trend, and it might be going up. So this is what I thought here originally. But when I come to my NZD currency pair to reference, I don't see that, you know, prices are actually moving in a positive or in a bullish momentum. So I will wait for confirmation in any of the pair, depending on which pair you are buying or selling. Okay. Okay, let me give you guys another example. We use a negatively correlated pair then. Oops. Okay, so this is my USD Swiss franc. This is my NZD USD. You can see that they are negatively correlated, right? So same thing. My prices are at a triple top, for example. And then I can see that, hey, you know, my prices actually at this level, I'll be thinking, hey, is my price gonna break out, or is my price gonna form a triple top and come back downward, right? And we can see that right here. Where's my okay? So at this point, okay, we're thinking whether it will break out, but prices actually move downward. So I'm expecting a slightly upward momentum, right? Same thing, right? But then it came down. So this is a fake breakout, and then it came back down. So I'm expecting this price to actually go back up. Correct? because at this level here, at this point here, my candle actually come down here. So if it's negatively correlated, I'm expecting price to actually go up here, which it did, but it was a fake breakout. So it came back down. Now I'm expecting price to slightly go up, all right? Because it clearly failed to break this level or key resistance level here. So you can actually try to throw in other levels. For example, maybe your 23.6 Fibonacci levels, right? Your 23.6 Fib retracement levels. You can actually throw in to see whether there are any other important indicators as well. So it's not just purely using correlation to actually trade, but it acts as a indicator for you to redefine or to make your trade more accurate. Okay. So I hope that I'm clear in explaining today's session. I've seen that some of you has just joined the session, but we have come to the end of the session because we have other webinars to host. If you missed today's session, this session is recorded. You can actually go to the website, IronFX. Let me just paste again. Yeah. All these sessions are recorded. You can go to webinars, which is here. Past webinars. Here. Let me cut and paste again. For those who have missed the past 50 minutes of the session, I have come to the end already. Okay, this will be the page. If you want to view today's session, click on English, and then there will be all the past webinars that we have recorded, and it should be here. So for today's session, if you missed it, it should be uploaded by end of this week or maybe latest by next week, early next week. Okay, so today's session, we are talking about correlation to help you identify or as an indicator to add on to your other indicators for a more accurate or more defined trade entry or exit. Okay, so I hope today's session is useful and understandable. Sorry if I speak too slowly because I have an ulcer. Thank you guys for tuning in. I will see you guys next week. Bye.
Hello everyone, my name is Emily and welcome. In today's video, we'll look at support and resistance. Support and resistance are two of the most widely used terms in trading. Support on a price chart is a price level when you can expect more buyers than sellers. In other words, more demand than supply. Support is always below the current price. Resistance on a price chart is a price level when you can expect more sellers than buyers. In other words, more supply than demand. Resistance is always above the current price. So basically, resistance levels indicate where there will be a surplus of sellers and support levels indicate where there will be a surplus of buyers.
In a downtrend, prices fall because supply is greater than demand. The lower prices go, the more attractive prices become to traders who are waiting to buy. At some level, demand that would have been slowly increasing will rise to the level where it matches supply. At this point, prices will stop falling. This is support. In an uptrend, prices move up because demand is greater than supply. When the price moves up and then pulls back, the highest point reached before it pulled back is now resistance. One method of trading support and resistance levels is right after the bounce. This is known as trading the bounce, so the traders buy when the price falls towards support and sell when the price rises towards resistance. Another method is known as trading the break. In this situation, traders buy when the price breaks up through resistance and sell when the price breaks down through support. It's important to remember that support and resistance are relative to current price. Anything above the current price is resistance, and anything below the current price is support. Thank you so much for watching us, guys. Bye-bye.